What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 14th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about the upcoming Bitcoin storm. We believe that after a period of relatively low volatility in Bitcoin's price, we are at a make or break moment where we are going to see a major trend direction move in Bitcoin's price, a major price fluctuation. So I want to spend some time to talk about why we believe this, what we expect. I want to dive into Bitcoin, altcoins, and the broader macro perspective to get a whole picture and try to determine which direction that's going to be. We've got a lot to dive into in today's video. If you guys happen to enjoy the rambling, consider dropping a like. It's one of the greatest ways you can support the channel. And before we dive into this broad analysis, I want to let you guys know about a no strings attached, no cost, no gimmick way where you can start to earn 6 Satoshis every single hour in the background. One of our partner applications here on the channel, EmberFund, which we've worked with as far back as late 2018, early 2019, is a really great index investing application in cryptocurrencies, but they've started to launch a lot of really interesting ways to gamify the experience around crypto. And one of them is their Bitcoin mining program. Now, if you download the EmberFund app, you set up an account, which again has no cost to it, you can already earn 1 Satoshi per hour just simply having an account on the platform. However, if you guys happen to use my link down below in the description, you'll bolster that all the way up to 6 Satoshis per hour. I've had the application on my phone for a period of time. I've already stacked hundreds of sats, and essentially speaking, with this referral program, you guys will be able to not only catch up to me, but continue stacking sats in the background at no cost. Essentially speaking, EmberFund itself not only serves as an index investing application, but they also have a means where you can compete in paper trading tournaments at no cost to you, where you can potentially earn various different prize awards that are going on constantly within the application. He gamifies the experience around crypto and allows you to test your trading skills before you may become more of an active trader in the market, trading altcoins, or even some of the titans like Bitcoin and Ethereum. So I highly recommend you guys just try it out, and at a minimum here, just simply utilize the feature for Bitcoin mining where you set up an account, and if you come in each and every day checking into the application, you'll be able to earn even more by stacking a streak on your Bitcoin sat rewards. So I highly recommend you guys check that out down below in the description using my link. It'll bolster your rewards. But EmberFund is a great application, irrespective if you're just looking for something that allows you to invest in index funds. EmberFund has got you covered, giving you a broad range of diversity towards a whole range of cryptocurrencies. All right, so now that I've gone through that, guys, I want to go ahead, spend some time here to talk about the technical analysis we're expecting here for price. Essentially speaking, after this 100% move from the absolute lows to the absolute relative highs here, we have continued to see stagnation in the same $28,000 to $32,000 price range for Bitcoin, the same range that provided ample support during the last bull market for continued price acceleration. Well, essentially speaking, we are seeing the counter opposite now, that as we revisit to this range, it is acting as absolutely clear resistance at this point, right? Again, maybe there is a chance that Bitcoin's price gets above that range, but I'm going to be very candid in my opinion here, guys. I'm going to stand my ground because you come here for an opinion that we do not believe Bitcoin has the steam to clear through here. And I want to spend some time to talk about that. Not only have we not cleared through this range yet, but we are approaching very close towards the ascending line of support from the broader ascending channel that started from back in October and November. And if we just take a look here from market capitalization terms, we need to ask ourselves, what is it going to take for Bitcoin to continue maintaining this upward channel, to essentially come up here and continue making higher relative highs? If it continues to hold this technical pattern, we need not look any further than taking a look at market capitalization. We've already accelerated from around $300 billion to around $600 billion for Bitcoin's price. The next major leapfrog move here we need to see is going to take us somewhere between 850 towards $1 trillion if the bull case is right, if we are coming up towards that range and are going to continue accelerating higher. And before we even dive into the macro perspective, before we even dive into some of the lackluster signals we're already getting from crypto, whether it be, say, the altcoin space, which is continuing to make lower highs and lower lows, or Ethereum that still can't get a solid bid above 2,000. I want to ask you guys whether or not, even if we take all the altcoins, push them aside, and just focus on Bitcoin here, if Bitcoin can really get up to that market cap range. Right? After all the analysis, if you come here day to day here on the channel, guys, I want you to think about the optimistic scenario. Can that really play out? Can we get another 50% plus move here in Bitcoin's market cap over the next couple of weeks? right? Because again, this is within a relatively tight, time frame here, really going into the next 3 months. Essentially speaking, if we go ahead and just kind of scan here around that range, around the kind of range around the $40,000 to $45,000 range, give or take, that's where we generally need to get to. We need to get Bitcoin up towards that price target. And we need to do so within the fall of this year, according to this channel. At a minimum, we need to hold on this line of support here for the next couple of weeks. We've got to show up to the plate. Bulls have got to set in a new relative high, the highest level we've seen since back in May of 2022, within the next couple of weeks, going in here into September. And the question I would ask here is, why haven't they come in over the past couple of months since back in April? And is it likely due to the fact that this is not a range of support as it was in the past, but a range of resistance, a range where there is too much supply in the market and not enough demand coming in willing to pay at this price? Now, I know some people will talk about the BlackRock ETF and that's going to be the catalyst that drives us through here. But I got to be honest with you guys here. It's not a slam dunk guarantee. And you are betting on a very big wild card event. I don't care what probability indicators out there are saying or how they're measured. At the end of the day, guys, BlackRock creating a Bitcoin spot ETF, just because it's BlackRock does not mean it's guaranteed. And we've already done a ton of price analysis on BlackRock itself, which has continued to decline. And irrespective of the price decline, if you compare it to the broader financial sector, it is giving us the direct signs that there is not 100% confirmation that this is just going to be a slam dunk guarantee. And again, if we take a look across the board here, I want to bring your attention not towards the fact that I'm somehow negative on Bitcoin. That's not my intention here, guys. I don't want to bash Bitcoin. No, I'm not shorting the market yet. We have not opened up any direct short positions on Bitcoin, Ethereum. For those of you who are making it this far, no need to leave any comments or complain that I'm somehow shorting the market. We're not shorting the market at all yet, right? We've been in cash during this period of time, but we have remained vigilant not because we're here to bash crypto. We're here to bring into perspective the macro perspective of what's going on right now. And that essentially this is not the time to spend money accumulating. I want to take a look here at commodities. We haven't taken a look at precious metals in a long time. Now, silver has not set in a higher bid since back in August of 2020. That was the highest price point we saw since back in 2013. And since then, silver, while it hasn't really, I guess, sold off back towards its prior lows, and I don't think it'll ever go back down there, considering its industrial capacity, the utilization of silver in various industrial purposes, but also as well in the fact that silver is a precious metal, and generally speaking, it will appreciate over time. But we can see here that silver is continuing to generally set in lower highs since that period of time in mid-2020. For 3 years now, more than 3 years, we have not been able to get a serious bid here for silver. Now, I'm not technically bearish on silver long term, but here in the near term, something's got to give here. If we aren't catching a bid here, we're likely moving down lower. So again, essentially speaking, it's not just me bashing on Bitcoin, it's also here in this case that silver, and more specifically gold, right, which has come up here 3 times at the $2,000 range per ounce, is still getting shot down, which likely means that bulls or buyers or institutional buyers who are expecting maybe that things will accelerate in the future, they're waiting to set bids at a lower price range, like $1,800 per ounce or $1,650 down in this range, or possibly even a little bit higher on $1,675. Either way, if you consider the size of gold's market, you're talking about hundreds of billions of dollars, if not up to $1 trillion in value, that's just going to get wiped off the map. That is not good for investor sentiment. Nor is it for silver, nor is it for Bitcoin. And when I come here to take a look at what the dollar's doing, right when everyone was going short the dollar below 100 on the Dixie, that was the perfect time to long it, and now it's up practically towards 103. And it looks like it's ready to clear through some pretty significant ranges of resistance that have been holding since November 2022. We're already pushing through it here, and if we get a bid up towards 104, this thing is going to start to run big time. And it's going to prove here that the Fed has not completed its job in the fight against inflation. It is not done tightening. And I know that this seems like a negative analysis, but at the end of the day, guys, I'm going to be as realistic with you as possible because markets aren't about feeling good, right? During the secular bull runs that last multiple years, if we really have the confirmation we're in one of those, that's where it's time to feel good take risk when there are capitulation events or those kind of minor corrections, right? But essentially speaking, right now, we do not have the signs that showcase the Fed has completely done their job. We already took a look at oil and natural gas. You guys probably don't need me to reiterate that. Essentially how they're rebounding and the reductionary effects that energy prices have had on the CPI are no longer the base of impacts, essentially. That's the key term that's utilized by economists. Those are going away. Energy prices are now re-accelerating, and outside of that, we've had the year-long window where the benefits of those energy price declines have essentially benefited the CPI. It is no longer going to be doing that. And essentially, I think the Forex markets here are pricing in that the Fed is going to have to continue course to the upside. Last month's 25 basis point increase is a sign of that. And we're not just seeing it here within energy prices or in the dollar or in the kind of commodity prices as the markets are realizing that gold and silver are not going to be the safe haven as inflation is going to be dealt with properly by the Fed, but we see it in a whole range of different indices. Right, as the financial markets have essentially driven up things like Homebuilders right up back towards the prior relative highs in November 2021, we've seen stagnation since back over a month ago in mid-July. And this is, again, a question we have to ask ourselves here. I want to just run through these charts. I'm going to be relatively quick. And I want to ask you guys here, do you think Homebuilders can continue to accelerate here? And sure, there's a housing shortage and stuff. There's definitely demand for home builders. But I want to ask you guys, can this really make the next leg up and continue to accelerate here? Right? Maybe Homebuilders looks okay. Maybe they can find some support here unlike last time and maybe start to move higher. Let's go ahead and take a look at XLF. Well, XLF has continued to set in lower highs since back in January 2022. It has not been able to clear through this descending line of resistance, which again gets easier as time progresses. It's lowering over time. So can we get through that range? Well, it's the same resistance we faced since May of 2022, which was prior support back between April and July of 2021. Prior support is acting as consistent resistance. It's not a good look. And if the financial sector is moving lower, that is a signal for a general risk-off mentality across equities, right? Take a look at SMH, right? The leading semiconductor ETF by VanEck, right? Multiple months of resistance between November 2021 and January 2022. Same exact range here where we got shot down. We had our worst week here for semiconductors. And if you really combine these 2 weeks, really our worst sell-off here we've seen since back during capitulation during August. Not a good look to see here for the equity valuations of semiconductors. This is, again, the Nvidias, all the players who should be benefiting from AI. And if we take a look directly at those plays here, Nvidia looks exhausted. It's already dropped about $80 per share from its relative all-time highs around $72. If we take a look at TSM, the backbone of the entire semiconductor industry in Taiwan, we can see perfectly as the prior near year-long support between December of 2020 all the way to February of 2022, right? But again, a really long period of time here where there was prior support. That again is acting as resistance here at 108, and we have cooled down to $91 or $92 roughly per share. If we cannot hold on this ascending line of support here and make this an ascending triangle or at least some kind of break it with higher lows and a consistent resistance range, we are in for a lot of pain. TSM is a near $500 billion company. If we continue to break through here, that is going to put weight here on estimations and give signs here, telltale signs that Nvidia, which is still near that $1 trillion valuation, that it's ready to start cooling off and giving some of those gains, that earnings are not going to be as optimistic as people are expecting. Now, I know some people have talked about the China narrative, right? China reopening, China's going to stimulate markets, and China's going to save the day, right? Well, we can see here, the Hang Seng Index, right, is continuing to catch a lower bid. It is not getting any significant substantial rebound here. After we saw the bounce up from November 2020 to January, we've just been fading since then, setting in generally lower highs and lower lows. So if we can't start to catch a bid here, and we really start to get below 18,000 on the index, I think that's your telltale sign to run for the hills. All right, and the reason for this is because China, there was a narrative back a couple months ago that China was stimulating markets, right? China was starting to print, and that's what essentially allowed for equities to rally. And that's true to a degree. It did for that short-term window. But then China started to revert that central bank balance sheet expansion, right? We had 3 months from November, December, and January. We can see from the absolute lows of September here towards February that we saw an 18.5% expansion in the balance sheet. And while that's generally great here, it's great to see that expansion. That's probably what allowed for some of the relief rally in global equities. China has since continued to contract these balance sheet expansions. And liquidity is not catching a serious bid. An 18% expansion like that in the money supply, I know it sounds like a lot to us as investors, but when you take a look back in the past, when China was routinely from, say, 2020 here towards March 2022, expanding it by nearly 28%, or back during the period of time of 2007, all the way to 2014, expanded the balance sheet a whopping 200% from the absolute lows. You start to have to ask yourself the fundamental question: is this a short-term injection of liquidity that will soon be contracted as inflation is still not dealt with, or are we in a secular bull market? Unfortunately, I don't think we're in the latter of the two. I do not think we are in a secular bull run, because monetary expansion should be able to move smoothly like this. It should be able to continue moving without any serious contractions. Does this look anything, or let alone for the past near decade, has China been able to stimulate financial markets like they did during the early 2010s that kicked off the secular bull run during that window of time of the last decade, from 2010 to 2020? Unfortunately, we're not getting it, guys. We are not getting it. China's reopening has been weak, it has been sluggish, and a lot of that has to do with the fact that the easy money, and also China itself as an economy, is going through a major restructuring as global markets start to move supply chains back towards their original onshore basis, rather than being dependent on just China as the single global point of trade. I'm sorry, I don't mean to be negative here, guys, but that China narrative is done. And if you guys are really just wanting to see this kind of play in action, equity markets, if you divide them, the Hang Seng Index by the Chinese central bank balance sheet, is essentially priced this in for a long time. China's in a rough spot here. Essentially, they've got to continue focusing on how they're going to maintain the strategic advantage that allowed for such high growth over the last couple decades, because it's a race to the bottom. Now it's getting to the point where the cost of Chinese labor is unfortunately not holding up as it was back in the past. Essentially, it's getting towards a point here where it's no longer competitive. People are moving factories to Mexico, they're moving it to other jurisdictions across the world that are closer to onshore, giving more diversity towards the entire global supply chain, and that is going to have impacts here. China is now at a fundamental discount towards its 2008 stock valuations. That range acted as resistance here in January 2023. That is not a good look. And if we see anything going on here when it comes to the big tech names, Apple, the largest stock in the US stock exchanges and in the world, Apple is getting shot down here big time, having its biggest sell-off since back here in August. And we've got to hope that it's going to be able to hold here on this support line, or this prior resistance, and become support and start to bounce off there essentially, right? Move higher, because if it doesn't, this is a deviation, a gigantic deviation, which means we are moving back down to new lows, most likely, according to traditional TA principles. That is not a good look. And if we take a look here at Apple, Microsoft, and the FANG stocks, we basically just topped out, had a huge topping candle here back in the week of mid-July, right in alignment with the range of resistance back during the peak of the last bull market. And if we can't catch a bid in some of these ranges here, right, if we chop down, go like this for a while, then we're essentially moving back down towards a lower range. And that's going to mean a lot of pain, not just for stocks, not just for commodities, but it comes back to crypto. We've got to be realistic here, guys. I know the bulls have still got the blue flip here. Our momentum indicator is still signaling that the bulls have not given that up yet. We are very close, literally just a few $100s away. But Bitcoin's got to do something here soon. And this leads me towards the ultimate topic we need to discuss, guys, because we talked about the optimistic scenario, right? If Bitcoin really somehow, gets an ETF approved, or, like significant buyers start to come in and drive us up towards this new, potential resistance range or the upper band of the channel, maybe even break through there and kick off a new bull market, right? We've got to have some big catalyst that comes through for that. But I got to tell you guys, a much more likely scenario here is Bitcoin just not catching a bid here, as it hasn't since back in April. And slowly and steadily starting off here by fading here out of this channel, and then starting to really pick up direction to the downside, waiting for someone to come in and bid on price. And I understand some people would say that we're not going to see the kind of sell side pressure we saw back from March of 2020 to June of 2020, because that was the Celsius BlockFi debacle. There was a lot of forced liquidations, also in DeFi, and people say that it can't repeat. Well, I gotta tell you guys here, I think that there are not only a plethora of loans in the DeFi industry that could get liquidated, there is still people who are using money to borrow crypto out there. Don't feel like for a moment that that has entirely vanished from the space. But outside of that as well, it's important to understand here that there is a kind of, I would say, kind of feeling in the air that I think a lot of people who have continued to believe that we're in a new bull market, who used a lot of the traditional metrics for bear market bottoms, right? Maybe say back in November, if you were lucky enough to catch the bottom. A lot of people who are sitting on some good gains here, who are starting to realize, yeah, there really isn't much technological development going on in DeFi. Yeah, there are still a lot of issues and a lot of scams, and people are generally kind of off from getting into the market. And once you really start to consider maybe even that inflation isn't done with, that the Fed continues to tighten here for the next couple of weeks and months, maybe it isn't the time to be sitting on all these gains. And then they start to sell. And a lot of those who have believed in the kind of hodl meme, never sell, Bitcoin is the best, you kind of falling in love with your assets, right? Which is one of the worst things you can do. Unfortunately, some of those people finally come to the realization and they start to get wise and start selling. And that drags us down here likely into a scenario with lacking investor sentiment on the buy side, lots of people willing to sell, some liquidations getting knocked down, essentially that we catch a bid here back in this range. Come back down in this range between 15K to 10K. And we see where Bitcoin's price finally catches a bid. I think the sooner we do it, the better, because we can revisit that lower band and it's something more moderate like 12K or 11K. But really, the longer we push this off, guys, the more we are shooting ourselves in the foot, so to speak, right? If you want to put it that way, essentially, like, we've got to get a nice solid correction here that knocks out a lot of that secondary wave of optimism, gives us a real accumulation channel, and allows us to really start breaking out. Or we've got to get that Bitcoin ETF approved, or we've got to get some significant institutional interest or corporate treasurers buying Bitcoin, not just MicroStrategy. We need other people, new participants in the space, or we are simply a bubble, an echo chamber, who are just continuously buying into this thing without the real sizable momentum that's going to drive a new bull market. The halving event is not going to save Bitcoin this time around. It is having a weaker and weaker effect, and it's getting to the point of redundancy when we have to ask the more fundamental question, are there more market buyers or market sellers who are essentially looking to buy or sell Bitcoin at the best available price? There's always going to be a buy or sell on each side of the trade. It's a question of where the market orders sell side pressure or buy side pressure is. If the sell side pressure is greater, we are moving lower. That's why we talk about market order flows so candidly here, because it lets us know the long-term direction of where price is going to go. If you guys like this kind of analysis here, if you resonate with this kind of thinking in the market and being smart with your capital, not just rushing into the hype and the narratives, if you guys like this kind of content here and you want to get more, I highly recommend you guys check out the dashboard down below in the description. It's our newsletter here on the channel. You can not only get a 20+ page report here of me covering cryptocurrencies, equities, commodities, and Forex, but you guys get our trade setups. You get access to the momentum indicator that we talk about here in today's video, that showcases those trends on the weekly and monthly time frame, and also on the daily with the blue and red line. You guys will also get access towards the discussion group where you can meet hundreds of other dashboard members. There's a ton of great alpha that we offer in this newsletter. We even have our mid-month webinar coming up here where you guys can ask me questions. It'll be coming up here later on today. So if you guys are interested in checking out the dashboard, I highly recommend it. But that's it for today's video, everyone. Thank you all so much for watching. I hope you guys have a great day wherever you are. If you'd like to, consider dropping a like. It's a great way to support the channel. Until the next video, everyone, I'll see you guys on Wednesday. Trade smart, stay safe, and I'll see you all in the next video.